Yeah, we are expecting those numbers to come out potentially on Sunday here on the 2nd. So we are actually expecting, and the market is expecting, around 445,000 vehicles to be delivered from April to June of this year. Now, this is also going to include, and we will see the impacts of the discounts that they have started to offer, as well as other incentives, other tax credits. So we are going to see if it's had a meaningful impact on not only production numbers, but delivery numbers. And if we could try to ascertain how the environment is in China as well. Now, when we get these numbers, we typically do not get a lot of commentary along with these numbers, so we kind of have to speculate where the growth is at when it comes to the actual deliveries. But this increase of 445,000 vehicles would be about a 5% increase from the previous quarter, so still showing some growth there.
Despite the skepticism, most Tesla bulls and fans will agree that the automaker deserves its valuation and competitive advantage. Tesla has a huge competitive advantage in the EV and general automobile industry. And this could be why investors are rather keen on the company and its stock. Today, we delve into the exciting realm of Tesla stock and the possibility of the stock staying up on the chart for a long time. We're also going to explore the latest trends and insights in the stock market, and particularly those factors that will boost Tesla's growth this year. If you're curious about the driving forces behind Tesla's soaring success, then this is a video that you don't want to miss out on. So join us as we evaluate key factors that indicate Tesla's stock growth and how it's far from over. Let's get started.
More EV players join in on Tesla's charging tech, but Jenny Horn, the shares are little changed. Guess maybe this story doesn't pack the same surprise anymore?
Yeah, Oliver, I feel like this is just the latest of the companies that are now joining their North American charging standard. Of course, that is Polestar. This will go into effect 2025, similar to the other companies we've heard from, those being Ford, GM, and Rivian. And Polestar is relatively a smaller company, so I think this is less impactful overall when you're a behemoth the way Tesla is now. But definitely good news, and actually it seems like the good news could keep coming, as we did get reports that indicated that the company may have achieved a strong second quarter in Australia, which is one of the several countries where it recently scrapped the option to order either the Model S or the Model X, of course, their higher end models. Now, according to this report, Tesla sold out of its new inventory in the country with fewer than 20 vehicles remaining available for purchase nationwide. Why this is so significant is because Tesla did experience a pretty major inventory buildup across all of its vehicle variants earlier this month, including even its Model 3 with rear-wheel drive. However, the recent clearance of its inventories can be attributed to the fact that they're offering free supercharging for select Australian models, although, again, a relatively small market, perhaps why we're not seeing this news drive shares up into the end of the day. But additionally, we did get weekly vehicle insurance data from China that suggested that Tesla could achieve record quarterly sales in that market, which is much more crucial for the success of the overall company.
Critics argue that the stock has reached its peak and that a downturn is inevitable. However, many analysts believe that Tesla's stock has growth left in it yet, and it's only just begun. The company's disruptive approach, expanding product lineup, and focus on research and development gives it a strong competitive advantage in the market. Moreover, Tesla's relentless focus on scaling up production capacity is a key driver for its future growth. The expansion of Tesla gigafactories worldwide allows the company to meet the increasing demand for its vehicles and energy products, further solidifying its market position. Hey guys, welcome back to Tesla Tomorrow. Tesla's commitment to innovation has been a game changer. The company's continuous advancements in battery tech has resulted in increased range, faster charging, and lower production costs. This not only makes Tesla vehicles more attractive to consumers, but it also improves the company's profitability. To achieve this ambitious goal, Tesla actively collaborates with top-tier partners in the field of autonomous technology, and these collaborations bring together expertise from various domains, propelling the development of their self-driving software. However, the question remains, can these latest developments and improvements keep Tesla stock on an upward trend? Let's find out. But before we get on with it, if you like this type of content, hit that like button, subscribe, and turn on post notifications to keep up to date on everything going on with Tesla. Tesla's stock market performance is influenced by a myriad of factors, including investor sentiment, market trends, and company-specific events. By analyzing Tesla's stock chart and identifying key trends and patterns, investors can make informed decisions and time their entry and exit points effectively. Tesla's ongoing success as a profit-generating powerhouse is pretty impressive. In a recent update, Polestar joins Volvo as the latest automaker to shift to Tesla's NACS charging plug, as they've now both announced an agreement with Tesla to use the US company's charging structure. The companies have announced that starting in 2025, all of their EVs are going to be equipped with an NACS port, and that's going to let them use Tesla's far-reaching supercharger network in Canada, Mexico, and the US. Likewise, in similar news, Electrify America is also adding support for Tesla's NACS charging plug, which the company has termed the North American Charging Standard. The company said it was working towards bringing this connector to existing and future charging stations by 2025. However, while Electrify America will be adopting a new charging port, this doesn't mean that they're getting rid of the CCS port, a standard that's been used by EVs from automakers like GM, Ford, Nissan, Honda, Hyundai, and others. According to the company, the CCS plug will still be available alongside the NACS connector. Since opening up its connector last year, Tesla's charger has been picked up by electric vehicle rivals like GM, Ford, Volvo, Rivian, and Polestar. Other popular charging stations as well, like ChargePoint, EVgo, Blink, and others, have also committed to supporting the NACS connector. And that's not even all. The standards organization has said that it's going to be adopting Tesla's once proprietary plug. According to the Energy Department, Tesla has 19,700 charging ports across the United States, located in about 1,800 charging stations, and this number is expected to continue to keep growing. A seismic shift in how electric vehicles are charged is gaining momentum after more and more automakers are agreeing to adopt Tesla's proprietary charging ports. Even General Motors CEO Mary Barra described the advantages of the GM's decision to adopt Tesla's NACS as its customers gain access to 13,000 more efficient chargers in the United States. She added that this decision is going to help GM save about $400 million. Tesla's recent partnerships and agreements are a recognition of the company's know-how in terms of the charging infrastructure, which is an essential milestone towards an all-electric future. And we can't fail to recognize the enormous potential of Tesla's AI as well. Tesla has long been associated with AI, and without this, there can be no self-driving cars, which is a considerable part of Tesla's investment thesis. Tesla has benefited from the recent AI investing interest, as the stock has risen nearly 60% since AI became the hottest topic in the investment world at the beginning of May. Its AI endeavors have been primarily focused on the pursuit of self-driving cars. With millions of Teslas on the road, the automaker collects an immense amount of data to train its autonomous driving system. And even when the ability to process this information and improve this model was lacking, Tesla designed its Dojo supercomputer, a technology that was built with one task in mind: using video from Tesla vehicles to train its AI model. This long-awaited improvement should help with Tesla's processing capabilities and further bring its self-driving model to the mainstream. Imagine if in the future all Tesla vehicles have FSD. This could potentially generate nearly $1 billion in annual revenue for the company. Furthermore, any additional revenue from FSD subscriptions would essentially be 100% profit, and Tesla's already spending money on its engineering staff to create this capability. Tesla's advancements in autonomous driving tech set it apart from the competition. With each update to its software, Tesla vehicles become safer and more capable of autonomous operation. As Tesla continues to fine-tune its self-driving vehicle capabilities, it's going to open up new revenue streams and reinforce positive position as a leader in the autonomous vehicle space. Tesla's innovation features like the over-the-air updates, Sentry Mode, and Autopilot all continue to wow consumers and investors alike. These cutting-edge technologies create brand loyalty and drive demand for Tesla vehicles, setting the stage for sustained growth in the market. Do you share these thoughts? Let us know down below, and let us know what your valuation of Tesla is. And if you want to know more about what Tesla's been up to over the last few days, go ahead and click on this next video on your screen. See you there.